Hey, this is Warren Redlick. Let's talk about Rivian. It looks like they're going to have their IPO this coming week. This is going to be a big story in the electric vehicle community and for people who are interested in investing in this kind of technology. So let's talk about Rivian. Are you ready? Let's go. Okay, just really quick. This is the very beginning of the SEC filing from Rivian. You can see it was filed with the SEC on November 1, 2021. And Rivian Automotive is the name of the filer. But let's go further into this. I'm sorry if this print here is tight type and it may be hard to read, but the key language here is that they're offering 135 million shares of their Class A common stock. There is also Class B common stock that I'll talk about in a second. It is estimated that the initial public offering price will be between $57 and $62 per share. The number they use later in the document is $59.50, I believe, so ballpark of $60 a share. This works out to potentially a $9 billion roughly. I'm going to talk about that again in a minute. And at the end of this, at the bottom of this document, it says affiliates of Dr. Scaringe, the CEO of the company, the founder and CEO, affiliates of Dr. Scaringe will hold shares of common stock representing approximately 8.9% of the voting power of our outstanding capital stock. That sounds like a big deal. I'm going to show you why it's not. Let's get into it a little bit more. Okay, so this is the offering. You can see at the top, they're going to be offering 135 million shares. There's an option to purchase an additional 20 million shares. I'm going to talk about that a little bit later. The total amount of outstanding Class A and Class B stock together will be 860 million, 862 million, or 882 million shares when everything is all done. The extra 20 million shares here is if the underwriters exercise their option to purchase additional shares of Class A common stock in full. Also, the cornerstone investors, which is Amazon, Ford, T. Rowe Price, and one other, have indicated an interest in purchasing an aggregate of $5 billion of shares. And the shares, so what that means is we're looking at a total about $9 billion in stock, and between the underwriters and the cornerstone investors, there's only going to be about $3 billion in shares available to the public. So retail investors are going to be limited to only buying about $3 billion in stock. This is going to help assure that they achieve the share price they want to achieve at the IPO. If there's a limited number of shares available, there's a lot of demand out there for the stock, they'll be able to fill their IPO and sell every share. One other detail here, the shares of Class A common stock to be purchased by the cornerstone investors will not be subject to a lockup agreement. As I understand it, and I'm not claiming I do understand it, as I understand it, that means the cornerstone investors will be able to get out of their stock quicker if they want to than they would be able to otherwise. Now here's this section called use of proceeds, and you can see net proceeds from the offering approximately $8 to $9 billion. This is really important actually for Rivian, that they're going to have a cash pile of in the ballpark of $9 billion when they're done with this. One of the potential mistakes Lucid Motors made when they did their SPAC merger was they ended up with only about $4 or $4.5 billion of cash. Rivian's going to have a much bigger cash pile that's going to enable them to go longer without having to worry about funding. Lucid is probably going to have to do a funding round at the end of 2022. Rivian, we'll talk more about this later, but it's looking like they're going to be in the ballpark of safe for at least a couple years and maybe longer, depending on how their cash burn goes and how their revenue goes. You can see here they're working with an IPO price of $59.50, even though the range was 57 to 62. We'll see how that goes. They say the principal purposes of this offering are to increase our capitalization and financial flexibility. That's pretty straightforward. They are going to use the net proceeds they receive from this offering for working capital to fund growth and other general corporate purposes. That's kind of standard language, but you can see they are working to grow the company. They're going to use this. That's what anybody would expect they're going to do. I think this is a really important slide here. This is their business model. This is where they describe what they're doing. This is all from their SEC filing. And what I worked out was they're hoping to expand capacity and production. Their Normal factory, that's Normal, Illinois, currently has an estimated production capacity of 150,000 units annually. So if you figure they're going to have an average selling price of $70,000 a vehicle when they get to full production, maybe that's conservative, maybe it's too much, but that's a ballpark at 150,000 units. Now, usually when you have a production capacity of 150,000, you don't produce 150,000. So maybe I'm being generous on the production side. You end up with 150,000 vehicles times $70,000 a vehicle. You end up with about $10.5 billion in revenue. Now, if they're able to deliver $10.5 billion in revenue, then a market cap of $52 billion, which is what the $9 billion times the total number of shares times the $60 share price or so works out to about a $52 billion market cap. So a $52 billion market cap on $10.5 billion of revenue, that's not crazy. The problem is, of course, it's not a $52 billion market cap in 2024 when they're producing 150,000 vehicles. It's a $52 billion market cap in 2021 when they've produced only a few vehicles. So that's a little bit of an issue. But they plan to expand their manufacturing footprint in Normal, so they're going to increase the capacity of the factory to more than 150,000 units annually. And they're going to build additional domestic and international factories to support future growth. I think the international thing, I'm going to talk about that in a minute. I think that's a little bit questionable whether there's an international market for the R1S and R1T. We'll see, but we'll talk about that. As of October 31, 2021, we had approximately 55,000 R1T and R1S pre-orders. This is much better than Lucid Motors. Lucid Motors talks about having 13,000 reservations. Rivian has over 55,000 reservations, so that is a much stronger number to start with. We'll see whether it translates. Fully refundable deposit of $1,000, but still, that's a bigger number. That's more impressive. They also have commercial vehicles, which will consist of EDVs. I think that's electric delivery vans. Plan to deliver 100,000 EDVs to Amazon by 2025. Amazon owns 20% of the company, ballpark. And so Amazon they have a committed customer to buy these vans. So that's another angle. They've got the R1T and R1S, which are a pickup truck and an SUV. They're making progress with those, and they're also making progress with the electric delivery vans. So that gives you a sense of what they're trying to do in the short term. One thing I'll say about this IPO document is there's not a lot of projection long term about where they want to go. Where Lucid said, this is how many vehicles we're going to deliver for the next so many years, and this is how much profit we're going to make in all these future years. As far as I could see in the IPO documents, Rivian is not really giving that kind of guidance. They're just saying, this is what we're trying to do, this is what we're trying to make, this is what we're trying to do, this is what we're trying to build, this is what we think we can deliver, but they're not really specifying revenue targets or profit targets for the next any length of time, really. Another key detail from the document is as of October 31, 2021, we produced 180 R1Ts, that's the pickup truck, and delivered 156 R1Ts. Nearly all of these vehicles were delivered to Rivian employees. In other words, they haven't really delivered to outside customers yet, but they still claim they produced 180 and delivered 156. Okay, not bad. By the end of 2021, this is the big number here. By the end of 2021, we intend to produce approximately 1,200 R1Ts and 25 R1Ss, the SUV, and deliver approximately 1,000 R1Ts and 15 R1Ss. So we should see Rivian pickups, and at least the pickups, in the hands of regular customers by the end of the year, unless they just have that many employees and they're only delivering to employees. Really good chance that some customers will have these in their hands. We'll be seeing these out on the road by the end of the year. I mentioned international. They say, we believe we are well positioned for international expansion in light of a healthy global demand for EVs and for the vehicle segments in which we currently expect to operate. I'm not so sure about that. I don't know if there's that much demand for pickup trucks and really heavy pickup trucks and really heavy SUVs in Europe. They said they're working on their business, existing operations in the U.S., Canada, the United Kingdom, and the EU. How much demand is there in Europe for a 7,000-pound pickup and SUV? The vehicle's curb weight is 7,000 pounds. That's a challenge. I don't know how strong that's going to be in international markets. We'll see. I don't know how much money there is for this adventure-type vehicle in international markets. My guess is that Rivian knows better than I do. So, I'm not sure. But that's a key feature for them to expand in the future. For them to achieve really, really big growth, they're going to have to succeed internationally. I think the electric delivery van has a lot of potential anywhere. I'm not as sure about the R1S and R1T. So let's talk about the insiders. There's this disclosure of who owns stock. You've got Amazon owns 17% of the company. You've got T. Rowe Price owns 14%. You've got Global Oryx Company owns 12%. And you've got Ford Motor Company owns 11%. Collectively, these four entities control 54% of the voting power. So these four entities really decide what happens with Rivian going forward. RJ Scaringe, who's the CEO, he will control 9.4% of the voting power of the company. He's going to have a collective total of 17 million shares at $60 a share. He's going to be made a billionaire by this IPO. So that gives you a sense there's other people who are insiders who hold significant amounts of stock, Manheim Investments, but you can see all the other individuals own a very small amount of stock by comparison. They're not really big players. I mean, it's a lot of money to have 325,000 shares at $60 a share. That's $10 million, but that's still, chump change compared to the big players. So RJ Scaringe and these funds are the big insiders. That's what matters as far as insiders go. Just another key detail going forward, capitalization, cash equivalents, and capitalization as of June 30, 2021. RJ Scaringe is going to have about 7.8 million shares that are going to be the higher voting stock power of Class B shares. There's a whole bunch of other stuff in here I'm not getting into, and there's $370 million of stock-based compensation expense to be recognized. I believe that a lot of that is stock being given to RJ Scaringe. I'm not sure. We're going to talk about more stock-based compensation in a second. So here's the 2021 Incentive Award Plan. The purpose of the plan is to retain and motivate select employees, consultants, and directors through stock-based compensation and cash-based performance awards. There's not a lot of specification about who's getting this money. This was one of the things that bothered me is when I went through this, it's not really clear. I think a lot of this is going to RJ Scaringe. I think the idea is if RJ Scaringe does good work, then he gets even more stock, and he goes from being a billionaire to being a multi-billionaire. 98 million shares of our Class A common stock will be initially reserved. 98 million shares. If each share is worth $100 a share, that's $10 billion in stock-based compensation available. That's pretty big. Provided that no more than 730 million shares of stock may be issued upon the exercise of incentive stock options. 730 million shares. That's a lot of stock-based compensation. There's potentially awarding, there's initially reserved 98 million shares, but potentially they will award more than 730 million shares of stock. You know, at $100 a share, that's like $70 billion of stock-based compensation, right? So there's some really interesting potential here for a lot of money to be handed out, and that's a lot of potential dilution of, you know, if you own stock in the company and they're going to give out this much stock to other insiders, then that's cutting into your potential to gain on the growth of the company. Now, Tesla does it too. You know, Elon's gotten a huge amount of stock-based compensation, but it's not to this scale. It's not, he's not getting stock to this scale. This is crazy. This is, you know, almost, you know, cutting cutting your ownership of the company by not quite half, but it's cutting it by quite a bit. Now, just from an accounting perspective, you see, based on stock-based awards, we expect to recognize approximately $185 million of stock-based compensation expense for the remainder of the fiscal year ended December 31, 2021, and $730 million for the fiscal year ended December 31, 2022. They are recognizing nearly $1 billion in stock-based compensation expense through the end of 21 through the end of 2022, nearly $1 billion through the end of 2022. That's a big expense that they're adding to what they're covering here. So from an accounting perspective, that's not a cash expense, that's handing out stock, but from an accounting perspective, that just increases the company's losses. It doesn't look good on paper. And as a shareholder, you're getting your ownership diluted. Is this a big deal? Hard to say. It's not something I really like to see. I don't know why somebody's getting $1 billion in stock compensation expense when they haven't achieved anything yet. I mean, maybe that's based on them actually achieving certain goals, but they're expecting to pay out $1 billion. What's being accomplished by the end of 2022 that justifies paying out $1 billion in stock-based compensation? Seems like a little bit of a stretch to me, but you know, without knowing the inside details and you don't really see what the basis is for the award, how it's determined that's going to happen, that's a little bit troubling if you ask me. Now, another thing to be aware of is their net loss. They're reporting for the third quarter of 2021 that they lost almost $1.25 billion. They don't have a firm number on it yet, but they're going to lose about $1.25 billion. If you do that every quarter, you're losing $5 billion a year. I didn't see cash flow in their numbers, but if you're losing $1.5 billion a year and you have $9 billion in cash, you're going to go through your money in about 2 years. So hopefully they're going to, as they start selling vehicles and getting revenue from that, because this is their zero revenue, right? So it's all spending. Once you start bringing revenue in, hopefully that lowers your losses, but they expect negative gross profit relates primarily to significant labor overhead costs. We expect loss from operations to increase. Are they expecting losses to increase going forward from $1.25 billion? I think I'm reading this wrong, but I think you could say, you know, this might be like the beginnings of big losses, and they might have bigger losses going forward. So that's troubling when you want to see a company that's operating efficiently. You don't like seeing this huge. You want to see a company operating efficiently. You don't like seeing these really, really huge losses. I really hope this doesn't continue, because if they're going to lose $5 billion a year going forward for a while, then they're not going to stay in business. It's going to fail. So that's a concern. Okay, so that's a brief rundown of the Rivian IPO document. There's a lot more content in there. I'd encourage you to take a look at it. I'll probably put a link in the description below so you can check the actual document for yourself. I just look at it and say, okay, I'm invested. If I was buying the whole company and I had $52 billion investment, right? When is this company going to be really worth more than $52 billion? What's it going to be worth down the road? Are they going to achieve all the things they're trying to achieve to be able to get there? Are they going to get there before they have to raise more money? Are they going to lose so much money that they're going to have to do another funding round somewhere in order to be able to afford to move forward? Is the market big enough for what they're trying to produce? They're not giving any hints of other vehicles other than this really aggressive pickup, which and SUV, which I think have a very limited market size. You know, $70,000 pickups that don't carry a lot of stuff. You know, the 7,000-pound vehicle only has about a 1,500-pound payload capacity, including the passengers. It's not a super useful vehicle. It's a fun vehicle, but it's not a super useful vehicle. It's a really expensive toy. I don't know how big the market is for that. And do they have some prospect going forward of achieving a more mass market vehicle? I think they do. But do they have the capitalization? Do they have are they innovating with extreme urgency? Do they have the same level of engineering talent and motivation? And is Illinois really the best place to locate your factory when we know that, you know, the potential for unionization and other problems and unfriendly government in that state might be a little bit bigger of an issue? There's a lot of little issues here or there. Overall, I remain optimistic. I like Rivian, the truck. I like the company. I want them to succeed. I'm concerned about the weight of the vehicle. I think that's a problem. But we're going to see how they do going forward. They at least are fair that they have a large battery pack and they're not hiding it. If I was choosing between Lucid Motors and Rivian, which one to invest in, and I had to pick one of the two, well, I would pick Tesla. But if I had to pick one of the two, I would pick Rivian over Lucid. I think Lucid has been more forthcoming, more straightforward, more honest in their disclosures than Lucid has. And I just have a little bit more faith in Rivian to deliver something meaningful to customers. And they've delivered more vehicles than Lucid claims to have delivered, even without being public yet. So I hope this is helpful. If you like this video, please check out my other videos. Support the channel on Patreon. Thanks to the Vasa Law Firm in Sweden and all my Patreon supporters for helping this channel grow. Check out elonbits.com for the t-shirts and the stainless steel water bottle and all that. Check out my channel, The Daily Lie, on locals. Links to everything in the description below. And thank you so much for watching.